Welcome everyone. This is Ron Groenke. I want to welcome you to this presentation about winning signal. Before we get started, I would like you to follow or look at this little introduction while you relax, sit back after hopefully a good lunch. So here we go.
You know, since meeting Ron Groenke, it's really changed my life. Somebody had told me about him and said I had to meet him. I'm really, really glad I did. And we've had a lot of one-on-one sessions. Really learned a lot about his strategy and his algorithm and what he's done. You know, I mean, he's the real deal. Ron really, I mean, he told me about his Apollo 6, 7, and 9, and how he was instrumental in making the mathematics for the Apollo launches and the communication systems that actually allowed for Houston to speak to the Apollo spacecraft so that it could get into lunar orbit and make it to the moon. And without his communications and his mathematics that he designed, those things never would have happened. That man most likely wouldn't have been on the moon if it hadn't have been for Ron Groenke.
Well, Adam, yeah, with the question, why do I want to help people? The basic thing is I've been very successful and fortunate. I've had a good career. I've been able to do a lot of things, and over time, I felt it's good to try to share that success. I've shared it with my children, with my grandchildren, and also now I'm able to share it with the average investor out there. I developed a number of concepts, formulas, used my mathematical ability to basically come out with something that allows you to go into the market, the stock market, and be very successful. There are ways that you can, in fact, accomplish your goals by taking a little time and understanding some of these opportunities.
Again, it's all mathematics. I mean, the stock market is a series of ups and downs and cycles, and Ron has the mathematics that get us the best returns possible. It mines. Well, basically, it's a big mining program. That mines out all the best stocks, tells me when to buy and sell. I wake up in the morning and spend 10 minutes a day tops looking over the signals. You know, not much decision-making process because I follow the portfolios. I just do what they say and go with it. And then the rest of the day is mine. You know, I get to spend it with my family. Go out to lunch with my wife. You know, get to see my kids grow. You know, I've taken some of his courses, I've attended his seminars. The investment that I've made has paid off hundredfold. You really can't put a price tag on it because I always thought that wasn't something I could get. That wasn't for me. That was for somebody else. Step by step, pointed me in the right direction. Just like that guy that looks up on the hill and sees that big house up there and says, I can never have that. You know, and if you don't think you can ever have it, you never will. If you're not investing and saving, you know, need to start now. So I wake up, I invest 10 minutes a day, follow the signals, follow the portfolios, and go from there. I don't have to worry. I know that, you know, my family's going to be taken care of if anything happens to me. Like, it just blows me away that, you know, somebody's been so instrumental in so many things and so much technology, and I actually get a chance to use his products. It's just fantastic. You know, he's found a formula that works, and when you find something that works, you stick with it. And this formula he's been using for 10 years. You'll go with your online broker and buy when it says buy, put in a market order, and that's what I like about Wall Street Winning is the fact that, you know, basically I have complete control of my finances, I have complete control of my money. You know, Ron has made the mathematics. The computer does all the work. Every morning it sends me an email. It tells me what to buy. And I follow portfolio, so I don't really have to think about anything. He's a great guy. He's taught me so much. If you're not working with Ron in one way or another, whether you buy software, buy, you know, Wall Street Winning, or you go to one of his seminars, or even buy his book. I mean, he's got this fantastic new book out that basically lays it out for you as well. So take control of your retirement and your finances because you only have one shot at this. And I'm definitely positioned to do that, you know, really going from not too much to, you know, having a few million in my retirement account. Winning is about winning more than you lose. And when you win bigger than your losses. And if you're not working with Ron, I'd start working with them right now.
Thank you, Adam, for that wonderful introduction. Again, let's go over an exciting development called winning signal. First of all, what is winning signal? Well, it's a signal of when to buy and sell. It's based on my stock and option trade technology, as I published in 2012 in my book, Show Me the Trade. And I'm also updating that in an upcoming release of a new book called Wall Street Winning, Sex, Lies, and Getting Rich. So I'm sharing my knowledge and my concepts with basically the world. So watch for that coming book. Who is Ron Groenke? Well, I have a bachelor's of mathematics degree with distinction from the University of Minnesota. As Adam indicated, I developed communication software for the Apollo 7 and 8 mission. I had the fortunate experience of being able to attend the Apollo 7 launch in Houston. So I worked on the communication software, did a lot of the mathematics behind that transmission from all the tracking stations through Goddard back to Houston to make sure that the communication with the spacecraft was always intact. As you remember, 8 was the first lunar flight, 11 was the first lunar landing. It's important to note that the time frame between these missions were months. 7 was on October 11th, 8 was on December 21st, and the actual landing on the 11th was July 16th, 1969. So within a year and a half time frame, we did a lot of missions. Unbelievable at that time with the technology available. I also worked on some top secret communication protocols for advanced graphics at the CIA and the Army Marine Corps. I had a top secret clearance, spent a lot of time at the CIA. I also invented the NCR Content Communications Networking System. So you can see my background is communications and I'll call it software engineering. I've developed software all my life. I enjoy it. I'm also one of NCR, or National Cash Register's laureates, an honor basically awarded to people that excel in development and innovation. So I'm also the author of 5 books on stock and options investing and the Visions investing tool software. Winning signal, I think it's the next step to success for the average investor. Let's take a look at what are winning signals. There's 2 types. There's a monthly signal. It's based on VTAM, which is a finite state machine, Visions technical analysis model, algorithm using a 1-year time frame. Wow, what a big definition. Visions is a program that I have been developing over the last 10 years. It's software based on a PC. The algorithm has been implemented and refined over time, and that's why I called it VTAM. So it's a technical analysis model. And also have developed what's called a weekly signal. It's an advanced version of VTAM. It does additional data mining. I'm looking for short-term, about a week, price, momentum, and movement. And once I start showing you the results here, I think you will understand the difference between the two and the opportunities that they present. What is a finite state machine? Well, it's really a model used to design programs and sequential logic circuits. It's a system, or if you want to call it a system where every state is defined, and to move from one state to the next, you have to have a triggering event or a condition. It's called a transition. So this is what my model does. It's a set of rules and analysis whereby the software, the implementation, goes from a waiting to buy into a buy state based on the algorithm. Then you're in a hold state. Then it moves into the sell state of a sell at a gain or a loss. Again, the algorithm determines and triggers each one of these events and moves back to a wait state. So it's the algorithm that basically provides for the transition from state to state. So there are no holes. When if a buy is issued, a sell will be issued later on, guaranteed. Let's take an example of a winning signal in action. Here I've chosen eBay. This is as of August 25th. You'll note that what's on the chart, it's a one-year chart. This is a monthly, basically. We're looking at a one-year time frame, and it's showing you the buy and sell signals as generated by the algorithm. And you can see there are five trades or 5 buys and 5 green sells, which were all successful. At the last one there, I should circle the buy in the beginning of June and the sell later August. Also highlighted the action right now on eBay is in a wait. So we are waiting to move to a buy situation. So the finite state machine is, and the algorithm every day is processing this stock, looking for the next move in a situation that allows us to issue a buy. I've highlighted the data basically on the bottom. You can see the wins and trades. The estimated annual return about 36% if we annualize. The winning signal on a $10,000 investment returned $14,000, 41% in 357 days. If you just did a buy and hold, you would have about 11 or 10,900, about a 9% gain. So you can see it's about a 4-fold improvement that the winning signal has over a normal traditional buy and hold. The stock went up, so yes, buy and hold would have been successful, about 10%, but winning signals would have given you 4 times that amount. There is the opportunity. There is a way to, I'll call it extract a lot of dollars out of the market if you do it at the right time. Here are the actual trades. You can see the returns on each one of the 5 trades, 6% twice, a 7, and the last one was over 11%. And the time frame was from June 10th to July 22nd, about 32 days, a little over a month. So excellent return for a month, 12%. Let's take a look at the black box algorithm in action. How is this done? First of all, you notice to the right there was some information, looked like a diagram. I've circled it here or put a black box around it, red box. Let's blow that area up of the chart because this is where all the action takes place. So if we blow it up, we'll give you some identification of what's on this chart. We see the stock price, that's very obvious. You see the 50-day average, it's the lighter blue line, so I'm showing you the 50-day average. There's a red line, it's called the buy limit, and then there's something I call the Groenke V. This is the technology, this is the thing I've been working on for 20 years. With my mathematics, I've been refining this process and have fine-tuned it now to the point where it has been very, very successful. The algorithm uses, a technical analysis. There are a number of components: stock price and direction, the 50-day moving average, the buy limit, and my Groenke V price trend and momentum funnel. Call it a funnel. It's going along, sweeping up basically ups and downs of this particular stock. The buy limit is a formula, and I've listed it here for you. It's called the optimization range. We have a range where I'm looking at where the system tries to optimize every stock. That can go from 10 to 52 weeks. So we would look at the low in that range and then add a fraction times that range high minus the range low. And that generates the buy limit. So a very key formula, and together with the V, will determine when we should execute a buy. And let's go to the next chart to look at how we do that. So I say the algorithm basically performs a buy when the following calculation meets a optimum return potential. We want to be trading in the V for 20 days or more. We're currently in the V or within plus or minus 5% of the 50-day moving average. Very important piece of information. And the stock is moving up. So the buy signal then is a formula 2 times the days in the V plus 30 if number 2 is true, and plus 10 times the number of up days. Now, the maximum of this this formula is 100. When you get 100, when 2 is true, you have 3 up days, and you've been in the V for 20 days. It's the ideal case. Sometimes you might be in the V for 23 days. The formula says 20 days or more. So if you're at 20 or 22, the calculation uses 20 days and 3 up days as the max. So that gives you the value of 100. So the algorithm now basically is processing this data on this was eBay every day, every time you're in a wait state. Remember the finite state machine, wait, what is the transition? The transition is to a buy. So the algorithm is going to determine based on all the calculations when the next buy is based on this formula. So let's take an example. What does the black box do every night for every stock? It basically, those in a wait condition, it will cycle through all the variables and their ranges. So F can go from 0.25 to 0.5. The weekly range can go from 10 to 52 weeks. Sell on gain from 1 to 20%. Sell on loss from 1 to 20%. And then our optimum return signal, 71 to 100. So we're going to process these formulas and use these ranges. And to do that, it takes about 10 minutes per stock using an Intel i7 processor. So we are processor bound. In my software, I tell people make sure your fan is not blocked because it will heat up your machine, because we are doing 100% processor bound to get this job done. It takes about 10 minutes per stock. So if we look at 8,000 stocks, we're talking about 60 days on one PC. Pretty difficult for any of us to do that. We need a lot more. Winning Signals is being processed every night now by Wall Street Winning. Takes about 4 hours using about 350 servers. So it's being done on a server farm. It's not a small task, but the beauty of it is it gets completed every night on every stock. So no wait, no work for the individual. So the key is we want to use the computer, have it work for you. It's really the new age of investing. Use the computer power. We want to put money in your pocket. You're all aware of IBM's Watson. Can beat anybody at Jeopardy. It can beat you at chess. It's being used now for a lot of medical research, cancer research. It's mining the data, and it uses a lot of information. We're doing the same thing here. We're going to mine the data, do all the processing for you at night, take all of that effort, and allow you to get information to make excellent investing decisions. Now, here's a winning signal in action. This has happened to be a buy on August 28th. So let's look at the formula, the buy signal. 2 times 20, so it's been trading 20 days in the V, plus 30, it's currently in the V, right? If you look at it very closely, you'll see that the stock is in the V right now. That's important to note. It just made it. The price you'll see on the chart says it's at 26.65, and you'll note the V lower leg is at 26.64. So it just got into the V, and it had 3 up days. 3 times 10 is 100. So here's a stock that basically is the ideal case. It generated a value of 100, and the buy said, or the optimum gain is anytime this value is greater than 75, issue a buy. So the action, as you see in the right-hand corner of the chart, is buy. The buy was issued for this particular equity. Here's another one, CSX. The formula here came out to a value of 82, and it said buy when it's greater than 75. Again, it's in the V. We had 3 up days, 11 days in the V. If you calculate the amount of time, you'll see that that's 11. So again, we have a buy signal. What else is on the chart? Look at the a range now. Once a buy is issued, the algorithm determines what the sell points should be. This is one of the other pieces of the algorithm, and I've noted them here. You'll see it shows the band. Sell at a gain above 31.94. So if it gets above that point, it'll start looking for a sell, set a stop loss as it moves up. And then there's a loss at the bottom, set a stop loss at 25.87. If stock moves back down, the algorithm says get out at 25.87. So these variables are different for every stock. Every equity has its own pattern, it has its own cycle, and I look at it this way. This is an algorithm per stock, and this is one of the advantages you have to let the computer do all the work for every stock. The fact that we process every one every night to generate all the optimum settings for each stock. So this isn't, they're discovered really that one size does not fit all, and this is why I think we're being able to provide such a winning set of signals. A lot of algorithms are kind of are used over a blanket over all the stocks. We are, basically implemented a algorithm per stock based on these different settings. So that's the key of finding good opportunities at the right time. Here's another one, Schwab. If we look at this one here, we were in the V 6 days times 2, currently in the V, and 3 up days. Okay, so that gave a value of 72. It said buy when the value is greater than 71. Remember, our range on the optimum was 71 to 100. And there are cases when that number gets way up to 92 that says you've got to have a lot of time in the V, be in the V, up days to get close to the buy signal. So this one is lower at 71. Again, you see the upper and lower parameters for the sell that gain at 32. So we bought at 30.7, and we're going to sell at an upper level above 32.83, or we're going to sell below 29 or at 29.18. So there again is the band that we're looking for this stock to move in, and that's based on the algorithm. It's based on the stock history. It's based on the stock pattern that the algorithm has determined is the optimum opportunity of when to buy and sell this equity. So those are monthly. Just how we were working with 12 months worth of data. We're working with time frames that are weeks, maybe even months. The weekly signal is an advanced version of VTAM. I'm looking at a very short period of time now, about a week or two, looking at the price and movement, and going to be doing shorter term trades. It's not day trading. This is kind of, I'll call it weekly trading. Again, let's refresh our look. This was the monthly chart. You'll notice we had a return of about 36%. Here's the weekly. Remember, this is a short time frame. This is 70 days. We determined that 70 days is the optimum for the weekly, and we had 4 trades, 3 successful, so 3 out of 4 at 75%. It's an excellent success rate. And the return, if you annualize this, we had 11% in 70 days. If you continue that over time, would be about 60% for the year. Whether you can get that or not is an opportunity. If you keep watching this, the opportunity is there because the stock has a certain pattern. But the example here, we did 11% in 70 days. A buy and hold in this period of time would have lost money. So we are exceeding, basically a flat stock, generating, 10 to 11% in 70 days is an excellent opportunity. And we had a buy a couple days ago. This was on up in the upper right-hand corner here. Here's the date of this chart, 8/25. So we had a buy here a couple days before that, and it's in a hold buy situation. Again, here is the range that we're going to sell. We're going to sell at 25.42 or 24.56. The last price of this stock was 25.23. So it doesn't have to move up too much more. As soon as this blue line gets above the sell at the gain here, the algorithm will determine once a momentum changes, it'll issue the sell. So we can look at a comparison between the two. Here we have the monthly about a 36% or weekly at 60. So you can see the number of trades we're doing in a shorter period of time, and basically getting more out of the stock based on this period here versus what we got here. We had a nice buy sell, right? We bought in this downturn here, and we sold really almost at the top, and then the stock started going down in this August, late August time frame. On the weekly, in, out, in and out, sold at a peak here, almost identical to this one, but then it bought on this leg up, and it sold on the way down. So it had a loss on this last trade. Remember, this is a weekly. It got out right here. Okay, so it did not experience this extra fall because the algorithm says in this time frame to exit the position. So it did its job, did it very successfully. Well, all well and good. So those are, some of the technicals, and you say, well, what about the fundamentals? Okay, technically it might be the right time, but what about fundamentals? Whoops, I see up in the right-hand corner here, investor alert. This is something I want to share with you at the end of the presentation. I've done a lot of work on economic cycles. I've even got a chart called the Cedric chart that I will be making available to you, but this is kind of a preview. There's something happening that everybody should be aware of, because it could affect your financial well-being here coming in the future. So stick around for that. I think it's very important. Fundamentals, yes, we have fundamentals. I've done a lot of work on fundamentals over my career, and it has served me well. I have three classifications: conservative, moderate, aggressive, and here are the main fundamental filters. For conservative, market cap, revenue, shares per day, positive earnings, buy rank, bear cash, revenue growth, and the stock price range. And I say these are most of them. There are a few others, but these are the primary ones that basically will grade and sort all the opportunities. C1 to C5, you'll note as you go down this chart, market cap goes up, revenue goes up, shares traded per day goes up, positive earnings. C1 is 2 of 4 quarters, C5 is 4 of 4. Buy rank, bear cash, something that maybe people haven't heard of. What is bear cash? Okay, and here you need greater than 0, or down at the bottom, greater than $2 billion in the bank. Bear cash is a company's cash plus investments less long-term debt. It's a number that has, I'll call it, saved me a lot of times from getting into equities that would get into trouble in a down market, get into trouble in a falling or failing economy. Bear cash, if you look at long-term debt, those companies that have a lot of cash in the bank can sustain a significant downturn, okay, without causing a lot of issues in their stock price. If you have a company that is highly leveraged, and on the next filter there, the revenue growth, you notice growing revenue is important, greater than 0, greater than 10%, the bottom one greater than 15. That's a significant hurdle. How many companies are growing their revenue by 15%? If you can find a C5, you got what's considered a diamond. It's the best overall. And if you have a company, for example, like I said, that's highly leveraged, their bear cash is negative, if their revenue is not growing, what do they have to do? Okay, they have to start downsizing. They have to lay off people to maintain their cash flow, to maintain their debt service. And that's the only way they can survive. They have to continually shrink, and that's not the kind of stock you want to invest in. You want to invest in growing companies, and you'll see that these are the ones that can give you a significant opportunity in the buy, hold, sell. Moderate, Same set of filters as conservative, except bear cash as any. So we basically said, okay, understand that these companies may have negative bear cash, and therefore they may be in the situation where debt service is a problem. This basically tells you're taking more risk. So a moderate is a more risky investment. The rest are all the same. And aggressive, bear cash and revenue growth, okay, is any. So now you have these two filters that kind of been turned off, and it's another indication that, okay, you're being aggressive with this company. They're having some issues, and what happens when they have issues? The stock prices get more volatile. There's more opportunity maybe to get a nice return on an investment, but you have increased your risk. Increase the risk in the underlying equity that it will be able to continue and perform. So that's a key element when we look at the fundamentals. So you can be aggressive and you can make a lot of money being aggressive, but you need to be aware that sometimes it can turn and really go against you. You have to be able to stomach that risk and take a loss at the right time. I want to also point out an A0. It's any for all of the fundamentals. I've said that if the equity doesn't pass my filters, I call it an A0, okay? And there are some A0s that have fantastic technicals. They can return 200 and 300%, but their fundamentals are very poor. And so an A0 is kind of, be careful, the risk is significant on an A0. So here's what the fundamentals look like. Winning signal fundamentals, we've got everything on this one particular diagram. Here's eBay. It's a conservative 2. The revenue growth is what makes it a conservative 2. And we have all the other pieces of information. The bear cash, it has $3 billion in the bank, $18 billion revenue, has a $34 billion market cap, 22 million shares a day. It meets all of our fundamentals. Here's the 50-day average. Here's something we call the firecracker, what it's traded on that day. It has a 10-week range in the optimization. 4 quarters are positive. So it's a conservative investment and is 2. And I've put the square here around the one that makes it a 2. It's not a 5. Revenue growth, remember, had to be greater than 15% for it to be a 5, C5. So it's on its way if it can grow revenue. So I took the filters and applied them to the Dow 30. I thought, okay, let's take a look at the Dow 30 and do the filtering on that. So here we can see how they all stack up. Apple is an M5. Boeing, very C. Cisco is C. These guys are growing revenue. Disney and Home Depot are growing revenue, but their fundamentals, okay? In other words, their bear cash is negative. They are making investment. Home Depot has brick and mortar. Disney is investing in new parks. The rest of them here on this page are A's. We have an A3 and A5s. The reason they're A5 for all of these is revenue growth. They have other good fundamentals, but these companies are not growing their revenue, which I thought was a very important indication of what's happening in the marketplace, in the economy. So that's kind of a red flag when you have all these Dow companies A5. Nike is a C2. Okay, Nike is doing well. They're growing their revenue. Very conservative. We have Visa and Verizon. Well, Verizon is an M, so bear cash there is negative. They're growing their revenue. Kind of did a summary. So for the Dow 30, we have 4 conservative, 5 moderate, 21 aggressive. So 1/3 of the companies are in the upper class, and then the aggressive is the other 2/3. The other important thing to realize is that this algorithm, it not only works for stocks, but it does an extremely well job on ETFs. So I'm going to show you some bull and bear ETFs and members of what we call the Wall Street winning portfolios. I'll cover that in a few minutes. What I wanted to basically show you is that the algorithm basically works on every particular equity, okay? For example, here we have the short S&P 500 short 1x. Okay, so if you did a weekly, here's three of three trades, 12% in 70 days, just by letting the system tell you when to buy and sell the 1x short on the S&P 500. 12% in 70 days. Well, there's a 2x. SDS happens to be twice. It's levered. It's the inverse of the S&P 500, and look and behold, it's 24%, just twice the 1x, which it should be. Okay, it's levered twice. 24% in 84 days. Again, we had 5 wins out of 6 trades, very successful. Notice what's happening in the right side. Been doing buy and sell. We had a buy, we had the uptick, and then sold, and it came back down. So in this last market turmoil, and as we move forward, looks like we're having more of these. The algorithm basically got you in and out and took a nice gain to the bank. Here's the 3x. Oh, that's 38%, 3 times the 1x, a little bit better than 3 times. 38% in 70 days, 4 of 4 successful. Again, we've been in this big downturn in the S&P 500. We had the buy here, the sell took place here. So we got a significant gain. You said, why didn't you sell up here? Well, this was a one-day event. Remember, we had a 500-point drop in the Dow. This is what happens in one day. So it says sell right there. So we got out before it dropped further. So the algorithm is doing its job on a weekly basis. Here's another example. We have the inverse and the normal upside. Here's the Qs. This is 3x, triple Qs. So the upper chart is the bull going. Where's the up form on the Qs, and the lower one is the inverse. So you can see the chart. You just see the inverse in the data, and the buys and sells. Okay. So the system will automatically tell you when to move from one to the other. We got the TQ, so we're sell at a gain, and now we're at the bottom waiting for on a wait for the action on the SQs. So the system will automatically go back and forth for you. You don't have to do anything. All you just got to wait for the signals. It's going to processes these every night. So when the market's going up, TQQ is the opportunity. When the market turns around, it gets you out, like it did on that last segment, buy, sell. And the SQs will kick in, and you'll get a buy. Because if you look at the chart, you'll notice we had a sell on the TQ and a buy here. We had a sell here, a sell, a buy and a sell, a buy and a sell. So you can see it's kind of oscillating between the two, back and forth, and the gains are significant. 26% here in 84 days. So, something to really think about. We have 28 on the SQs. Here's a record of the trades. Look at the last trade, 7%, trade number 9 on the TQs, and we had 19% on the SQs. So that big movement up, we took a 20% gain to the bank there in 8 days, 9 days, extremely profitable. So the system is generating these buy and sells as necessary to take a significant gain to the bank. Here's QLD. This is 2x bull, 2x bear. QID, 15%, 14%. Not quite as good as the S&P 500, but nevertheless, excellent returns. Here's a financial ETF. The 3x up, the 3x down, 30% in 113 days, 35% in 84 days. So the opportunity here is significant to be able to garner a significant return on these ETFs, and this happens automatically. You don't have to do nothing. All you have to do is let the system give you the signals. You just have to execute the trades. How about oil? Here we have UCO, which is 2x oil. Not too many trades, but again, profitable. And on the inverse, same thing, doing very well. In other words, not, these are monthlies now, so it's weighted on the downturn, this big long down leg. The algorithm says no, 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 no. Can't find enough time in the V that this thing is moving up. Had to get to here until it stabilized. We did a buy and a sell, and we were out again for quite a while. This flat time, no opportunity. Not out all at once to detect this upturn. Price of oil has now moved up, is moving up. So here's where it said time to buy and look at this opportunity. So the buy is here. On the inverse, just the opposite took place. Okay, we bought and sold on the upside. Got that one to the bank. I had a buy and sell here and a buy and went up. You said, oh, we missed this big upturn. Well, it started to fall. The signal, the algorithm says time to get out. Then it said not time to get in. And look, and lo and behold, it wasn't in. We did not experience this big drop. So this, you could say in hindsight, well, you missed this upside. Well, did you? If you would have got out at the right time, maybe yes. But there's something to taking a nice gain to the bank. 82% in 12 months is pretty good. You don't need to get greedy to be successful. So let's take a look at a buy signal. Here are my buy signals as of the 1st on Monday. These are all my buys that were sent to me based on the algorithm from Wall Street Winning. And let's look at CNX. So here's the what a buy signal looks like. This is what you get. You get in an email. And let's go over this diagram. So the detail is it's a buy. It's showing you the last price. It's showing you the equity name and the target return. So the annualized target return is 30%. This is what the winning signals will generate. The algorithm is trying to generate 30% based on past history. It's a member of the S&P 500. So for example, Apple is a member of everything just about. So you have a big long list, the 100, the Dow 30, etc. will be listed here. Potential return of $807 in about 18 days. So this is a calculation of based on past history, this investment on $10,000. We're saying about an 8% return in 18 days. If you invest now, and we have a success rating of 3. What is success rating? Success rating is a calculation where we're looking at the win-loss ratio and the percent return. Again, it's a mathematical calculation that we sort and filter opportunities by. And so we're saying 3. We had 3 on this one as a good potential. Excellent is 4. Super potential. If you ever find 5 money bags, we're saying that's a super potential opportunity. 2 is okay. 1 is marginal. 1 is marginal in the sense that the return and risk reward is not maybe worth the time to go after it. So let's again look at the winning signal in action. Here we have the action we have here is a buy. On CNX on the 31st we had a buy. Annual return of about 29%, 32 in 363 days. Here's a success rating of 29. So on our signal there, that would have been a 4 or 4 bags. 5 is greater than 40. Now, 4 of 4 trades. Successful. Here's the buy fundamentals. So you can say, okay, this is a buy signal. We were issued this. We looked at the chart. If I go back to the chart, this is what we were looking at. What's happening? We're seeing this over here. So, okay, so the technical indication is buy. It's turning around. Fundamentals. Okay, we have 2 of the last 4 quarters were positive. So it's an aggressive 1. It's aggressive because the revenue growth is negative. Bear cash is negative. So Consol Energies has these 2 ones that make it an aggressive. both, so you have to be aware of that. You're taking an aggressive approach. It's an opportunity maybe to do a trade, but this is kind of signals you that you are making an aggressive decision. You can look at the profile. There's a profile button. It tells you if you don't know what this company does or the market sector that they're in, where they're located, profile right here will tell you all about it. You can read about it. You need to understand what you're investing in, and that's what that's there for. Here we have another buy, EXR. It's a moderate 3. Why? Because bear cash is not available or negative. In other words, we can't calculate bear cash because of their financials. Then we'll give it a moderate. And 3 is basically where it fits in market cap. I've underlined market cap on for the 3. So here we have very good fundamentals, knowing there's no bear cash. Revenue growth, 13%, makes it a 3. Annualized return about 62, looks like a good opportunity. Good volume. Revenue of 600, close to 700 million per year. So it meets our moderate 3 type of fundamentals. Here's another one, NSU buy. This is a monthly. It's a conservative 2. Volume per day makes it a 2. It has over 15% revenue growth. Bear cash, positive, 512. Good return, market cap, but the volume per day, we like to, puts it at a 2. The higher this gets, the higher the number gets. So we got to get up to beyond 250,000 shares a day to make that a C5. But again, this is fundamentals look very good. So that's the buy signal. Let's look at the sell signal. Sell. Here are my sells on Tuesday the 1st. Sell signal is just it. Sell. Take action. Sell. There is no. You don't need to look at the fundamentals. You can go look at the chart. It said sell at the gain. Here we have the chart. This is a weekly. So we had a buy sell. 4 out of 5 positive and 7% in 70 days. So here's the sell at a gain. There was the volume, conservative 2. Now winning signal. Here's our alert again. Remind you that there's something happening in the economy, and this economic cycle thing is something that you should be aware of. So stick around to learn how to get that. Winning signal even works for stocks that have been around forever. They basically track inflation, like the members of the Dow 30 are a prime example. Done an analysis here. Here is the Dow 30 stocks. Here is the monthly winning signal result, and the dark one is the weekly. So if you look at all the Dow 30s, you can see that some stocks, Apple, performs fairly well either way. We have Goldman Sachs does better on the monthly. We have Microsoft does excellent on a weekly trade. So this chart will show you that if you did monthlies, about a 15% return. Weeklies average at 20. The Dow, in this case, this is before the big 500-point drop, about 7%. This is as of June 30th. So we did not experience yet the big downturn here in August, September. So this red line is moving down, probably 0 or below 0 right now. And our winning signal is basically opportunities in this time frame. It even captures gain in a downtrend. Here's Caterpillar. You got to look at this. It's from 70 down all the way down here to 75. So went negative by $500 if you bought and hold. This is a weekly. 141 days at a 5% gain. So if you annualize that, about 18%. So there's opportunity to take these gains to the bank and then basically get out when the thing is dropping. Here's a recent buy for AXP, 7% in 115 days, 24% a year. Again, this is a weekly. So we're looking at taking weekly returns out of this stock. Here's the fundamentals for AXP. You'll note that here's the hold buy. Here are the indicators of where the sell would take place. If you bought at 75.63, it's currently at this price, so it's getting close to the sell above this number. As soon as it gets above this number, the next down leg it will sell. We also can get significant huge winners. Again, here's an opportunity. This stock 155% in 360 days. This is on a monthly. So it basically extracted the peaks, this peak, this one, and now we're back into a buy looking in this time range, 47 to 62. It's currently at 52. So about a $10 price swing based on its past history. Here are some performance statistics on the indexes that the system is generating. On the Dow 30, about 15%. On monthlies, the S&P 100, 18%, a little better. On the weekly, the Dow 30, about 21%, 22% in the S&P 500. So this is just following the signals. You can see here that in this system, there's 15 in a wait. We have 7 sells. We're holding 8. So we're waiting on 15 buy opportunities. In the S&P 100, we're waiting on 42. So we did 31 sells. This has just happened the last 2 days. Exited a lot of stocks because of the downturn. The average win loss. Here is the average win, 2.5, 18, 24, 22. This is weekly. We look at a monthly. For example, in the NASDAQ 100, our average win is 10%, average loss is 5. So that's twice. And here's the win rate, wins and losses, significantly successful win rate. Same thing with the Fox 50. 132 wins, 20 losses. When we win, we take 8% to the bank. When we lose, we're losing 4.6%. So this number is almost twice, and this number here is almost better than 6 times. So if you kind of multiply those together, you can see the effective leverage of wins and the amount of gain. You're always going to have losses. You can have losses in any system. The key is the loss rate. If the loss is less than the win, and if you have a positive win rate, so all you need is 50%. In this case here, you would have a very successful set of trades. Again, here are the weeklies. These again are always smaller numbers because we're having many more trades. So we're taking nickels and dimes to the bank every time we do these trades, not waiting for a longer term appreciation. I want to also quickly cover some performance statistics. There's 4 portfolios that I manage at Wall Street Winning. This is the overall return. It's $100,000 per portfolio. Right now we're at about a 66% average return. Here's the bronze. This last summary, a few days ago, we're at 30%. These are the 5 positions, 20,000 each, and they're staked. So we're holding 4. And 1 is also in a hold buy state. Here's the silver, that's at 85%. This goes up and down based on what's happening in the market. We have a couple of huge successes that we're waiting to take to the bank. Here we did a sell on gain, and we have a wait. We're waiting on SDS. What's SDS? Remember, that's the inverse. Here we had a sell and gain on our this is the gold portfolio, our target here. Remember, I was showing the target. I didn't refer to that. Let's back up here. The bronze, we won about 20%. We're above that at 30. The silver, 30%. We're at 85 in this case. Gold, 40%. It's at 63. And here's our 3X financial. We just did a sell. So we're taking a lot of gain to the bank on these ETFs. For example, in the gold portfolio, here's some number of the completed trades. 40,000 average invested in these trades because there's 4 positions here. Remember, these are no overlap between portfolios, so FAS is dedicated to the gold. And you see there's 1, 2, 3. There's been 4 trades on FAS. This one was negative, 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 but this one here was positive. So that offsets those negatives. So we're in and out. Here's QLD. 1, 2, another QLD, both positive. Here's a negative. And then here's QID, the inverse. So the inverse, the short Qs generated $1,300 in a very short time. This is the one I showed earlier, 18 to the 26th. So the estimated annual return would be about 57. Here we have almost 8% in 50 days. Here's the diamond portfolio. Our target is 50. We're at 87%, and we just had a sell on this. This equity DRN is a 3X. Remember, the portfolios are all based on ETFs. They're all weeklies. So trying to take significant gain out of these equities in a very short period of time, and it's being very, very successful. I mean, here's the inverse of the S&P 500. We're in a weight. We're in a weight on the inverse here. So those gains were taken to the bank earlier. Here's the chart for DRN. This is a huge winner. 70% or 20% in 70 days. So just annualize that. It's almost 100%. Well, look at the trades it did. In, sold, waited. Say, well, we missed this. No, we didn't miss it. We went down. We're out. Now we're looking for the uptick. Got it? Sold. We're out. Waiting for the opportunity. Get in. Take it to the bank. Get out. It's going down. You don't know if the stock is going to go down here. So it says I'm going to take the gain to the bank. It waited. I missed this, but bought here and sold here. We were out now, and the market dropped significantly, right? So the signal did its job. It got us out here, and then the market took a big drop, turned around, and now it says buy here. So it's basically extracting these 1% and 2% gains out of this stock on a very short-term basis. Here's the diamond portfolio completed trades. You'll notice here all these greens. There's only 1, 2 negative results. Here there's 5 positions, over $5,000 gain in 52 days. That's 10%. If you can do that for the year, that's about 73%. So you can see that there are significant opportunities just by following the signals and just by investing with the portfolios that are available at Wall Street Money. Now I'm going to show some examples quick of stocks that have gone through all this fundamentals and what their probability success is. So here we have Under Armour, significant returns, monthly versus weekly. So here's a continuous opportunity to do a great investment to garner a significant return. Here we have Avis, again, following what's happening on a monthly, a longer term, or a short-term basis, in and out of the position. Here's our QLD. This is the 2X upside for the Qs, NASDAQ 100. And so we have monthlies doing very successful, 29% in a year, or the weeklies about 15% or 42% a year. Well, investor alert, be aware that this is something that you should be waiting for it to end here. Winning signal. The following examples fell through all the filters and are considered to be high risk aggressive. So here's, I want to show you that you can make a lot of money, but the ownership, when you don't consider the ownership risk, you need to understand that. Here we have CNET, China Net Online Holdings, 422% in 360 days. Okay, so you can make a lot of money on this guy, but you got to realize that the fundamentals are maybe non-existent, and it's a Chinese company. It's a company in China. You might question whether or not the fundamentals are even believable. Here's the fundamentals: no earnings, revenue of 39 million. Is that enough? Market cap of 30, 180,000 shares per day. So very small company, suggesting high risk with negative earnings. So that just makes you aware that, okay, if I jump into that to maybe get some of that high gain, it's I'm taking a significant risk. Here's another one, 231% or 380% annualized. Well, it's possible if you follow these trades to do that. Again, a lot of red arrows here. Market cap pretty low, 57 million. No, all earnings, quarterly earnings are negative. Revenue growth, negative. Losing money, in other words, 32% and revenue of $1 million a year. This company tomorrow may not be around, so very high risk. So that's just to demonstrate that the system will extract and will find these opportunities for you, but you need to validate the equity, validate the company, validate what they do, look at the fundamentals, make sure that you understand what you're getting into, so that you don't step on yourself and lose a lot of money because the company went belly up. Here's a Yang. This is an ETF, 65% in 70 days. That could be about a 284% return. This is a weekly. So maybe you say, well, if I buy here, I can get out in 3-4 days. Yes, you can. It's a primary opportunity to do that sort of thing. This is a ETF bear, and that's been performing because the economy in China supposedly is going down, so that's having a negative effect. Here was a buy just that turned up here on the 31st. Here's another one. Getting close to my time here, so let's move on here. You got to understand there's risk in any type of information that you use, but you need to understand that the methods and techniques presented in this webinar, they may be profitable or they may be result in a loss. Past results are not indicative of future. The examples of the companies I used here are presented as opportunities. They're for information only. They are not recommendations. I'm presenting basically data and information. I suggest before you invest, learn as much as you can about the investments that you make. Do extensive research. Knowledge will put the odds in your favor. Always know what you're investing in. Do not do it blindly. Make sure you understand the underlying risk in the equity. And it's good to use indicators and systems to help you. It's a tool. Use it to help make your investment decisions. That's the end of the webinar. Let me go to another form here. I want to close with some information for you all.
You should always try for something that has never been done or that others have tried and failed. Then sometimes, with good luck, you will succeed.
Wall Street Winning Signals finds investment opportunities that allow you to take $25,000 and build that up to generate a steady income of $20,000 a month. Not only that, you would have $1 million in addition to the $20,000 a month in income in 15 years or less. I've made this plus much more using my asymmetrical risk-reward trading method. Hi, my name is Ron Groenke, and you probably think since I made that much money that I've been an experienced trader all of my life. But that is further from the truth. Actually, I used to be a mathematician and computer programmer for NASA and a number of other companies. And because I had excelled at math, science, statistics, physics in my studies at the University of Minnesota, I was highly recommended by some of the biggest companies in the United States. They sent me great offers to work for them, but it was NASA who was willing to give me more creative leeway. Working for NASA was an amazing experience, one that I'll never forget. And it also made me a lot of money. Better yet, I learned some amazing things that I've been able to apply in many different areas of my life. For example, when I retired in 1993, I decided to try trading stocks. I did fairly well at first, but soon stumbled upon a new and profitable world of weekly trading, and it was here that I found much less risk and overwhelming success compared to other strategies in the stock market. The only thing was, due to my background in computer programming and math, it didn't take long before I got bored sitting there watching the market and trying to determine when and if to trade. So that planted the seed in my head. It would become Wall Street Winning's winning signals. Really the most reliable and accurate trading system that I designed and created based on the most cutting-edge technology and data analysis that I basically learned at NASA. In fact, not only was Wall Street winning signals inspired by and designed using a lot of advanced technology I learned at NASA, it actually is engineered to perfection. It uses a breakthrough technology called Visions. In a nutshell, Visions takes highly complex trading strategies and blends them together to create an unbeatable winning method. Month after month, it's been so successful for me and a group of close-knit friends and clients that getting Visions into the hands of more traders has become my mission. When I retired and got into trading stocks, I soon realized that it was possible and essential to use statistics, past chart patterns, and probability to predict with a high likelihood the chance of something happening with a particular stock. And it didn't take long until I moved into weekly trading and realized the same thing. Within a few months, I was thinking about ways to use the technology I learned at NASA to create a trading robot to automate the entire task, finding the best trades to make. It took a lot of time, effort, and money, but it was worth it because using the breakthrough technology I uncovered, I created this revolutionary technology which uses the most cutting-edge indicators in the market. Like I mentioned earlier, I am now over $1 million richer. And it's thanks to what I did with my account for the past 15 years, using nothing but the strategy we use for Wall Street winning signals. Now, I wish I could say that's a magic formula, but the technology is all based around pure math, statistics, and probability. You see, trading follows cycles. It repeats itself the same way history does. If you take a look at trading charts spanning back 8 years or more, you will see patterns that can be used to determine the future movement and probability of certain trades. There are certain market events that also affect prices, and they also come often. The great thing is that Wall Street winning signals looks at more of the long-term market awareness and less on the short term. This means there's less risk, since the system looks at the overall trend of an asset, keeps an eye on the longer-term market awareness, excluding small movements that don't matter because all we need to do is to determine whether the market will go up or down in a specific period of time. The algorithm that is programmed into Wall Street winning uses fundamental and historical indicators to analyze and predict stock movements. In other words, it uses past trading charts, patterns, and history to accurately predict and forecast which way a particular asset is going. These charts and past trading history, combined with a few other indicators, can accurately analyze and predict the direction of the overall market. Wall Street winning targets the following buy, hold, and sell strategies. They're called winning signals. First of all, we have a monthly signal. This is based on the original finite state machine of the Visions Technical Analysis Model, or V10. And we have a weekly signal. This is based on an advanced version of V10 that mines the data looking for short-term, about 5 to 10 days, price movement and momentum. If you invest $25,000 and then you take that money and keep reinvesting in another trade that Wall Street winning finds, there's mathematical certainty that you can continue to grow that seed money into $1 million in 15 years or less. Of course, if you want to start with $50,000 or even $500,000, you will cash in more profits faster. To build great wealth, you need a rock-solid system that performs in all economic and market environments, one that wins 50% of the time, over and over, like clockwork. Using the Wall Street winning trading system allows you to do just that, because the long-term market awareness that the Visions algorithm looks at can accurately predict and forecast which way a particular asset is going. Just like I was able to determine by looking at past trading charts. Big returns in the past can actually help you find and predict the big returns of tomorrow. This is overall long-term market awareness. It can make you rich, and that's exactly what Wall Street winning does. Based on the patterns and charts of the past, it can hunt down and find trades that are ripe for explosive growth now and in the immediate future. Wall Street Winnings, Winning Signals finds patterns and cycles and uses important indicators to find trades that are highly probable to return extraordinary profits. How do you identify the trades that can continuously turn $25,000 into $1 million in less than 15 years, plus create $20,000 in monthly income like I've been able to do? The answer is obvious. The easiest way is just use the same rock-solid formula I use and follow the winning portfolios trade for trade. I knew I could harness my knowledge and use this technology in other areas of my life. And since I needed something to do after retiring, I fell in love with trading. And I didn't stray far from the knowledge and technology I learned at NASA. After all, I knew that basing Wall Street winning on math, statistics, and probability was a safe bet all along. It's what I had known and used for more than 30 years through school and work at NASA. So I can't be so surprised when it worked in stock trading. So when designing Wall Street Winnings, Winning Signals, and that technology, I knew exactly what was going to go into the program. After all, if you were a doctor in charge of performing an important surgery, you wouldn't go and just try out new techniques or a new method you just read about, would you? Of course not. You would continue to use those techniques that have worked for you and will continue to work for you. In other words, you don't try out totally new and unproven things. That's why you can use Wall Street Winning to make your trading the most profitable it can be. It's all based on technology myself and others have been using for many years and have seen work firsthand. Not only that, I've made over $1 million in the last 15 years. It was built for the purpose to go out and find the trades that are likely to show the biggest returns. When designing this program, I spent months making a thorough systematic study of charts and patterns that get fantastic double or triple digit returns. Here's all it takes to profit with Wall Street Winning. First, you turn on the program. It then uses the built-in trading technology and the powerful winning signals we programmed into it to screen all the assets available for trading. It then isolates the handful of trades that share the trading criteria we programmed into Wall Street Winning to find the trades that are likely to perform with the greatest probability. The winning signals then alerts you on those trades directly via email to the opportunities bringing high returns and winning 50% of the time, like it did for me today. More importantly, the $20,000 profit I made most months is that simple to use. You set up your account, load up your online broker account with funds, then you follow a portfolio or two trade for trade, and then make the trades. It won't take long before your trading account takes off and skyrockets upwards when the winning signal is finding the most profitable trade after trade. Sure, some traders can learn this over years of experience, but even if you have the knowledge and skills, you would have to spend hundreds of hours screening potential trades. Personally, I don't have the time, and most traders simply don't either. That's why I made Wall Street Winning in the first place. I wanted something that would provide you with the way to search for and find the market's best trades that are most likely to return huge gains and incredible profits that come with them. And when I retired at the ripe old age of 49, I knew I had to find something else that would interest me. Little did I know that the knowledge, experience, and technology that I learned at NASA would help me later on to create the most successful stock trading algorithm ever. The engineering we use with this system is unlike anything else in the United States, or the world for that matter. If you want the opportunity to lock in 5-figure profits monthly, I'll show you how. You can trial it for a limited time. It's important to know that although nothing in the market is a sure thing, Wall Street Winning can return trades that are as close to a sure bet as you will find anywhere. So here's the thing. I've seen the system work beautifully in an up market, down market, or sideways market. Whether assets are going up, down, or going sideways, you'll have plenty of opportunity to profit. That's why I urge you to test it while the offer is still available. After signing up, you can log in, fill in your own hot list, choose the portfolios you want to follow, and sit back as it hunts down the perfect trades that are right for the picking. These trades move quickly, as do the profits, so the Wall Street Winning technology is perfect to help you find them. So I'd love for you to gain one of the limited trial places on offer and test drive it for yourself. But just know that the trial places are on a first come, first served basis. The cost will be $99 a month or $997 for a full year subscription. And sure, that's a terrific value when you consider the kinds of returns it can produce. Even if you have a small amount to invest, you can now see how I turned my money to over $1 million in 15 years. Does it sound worth it? All you have to do is follow the system. Yes, you too, with a steady investment of $68 a day, can be a millionaire in 15 years or less. But again, the Wall Street winning system is only available to a selected few. All you have to do is sign up before the trial places are gone. You can use it today to put thousands of dollars of newfound profits into your bank account. So go ahead and sign up today, and you'll be on your way to putting more cash in your account with the power of Wall Street winning.
So this is the offer for today for winning portfolios. You get all 4 portfolios to follow, no extra analysis. You get all the buy and sell signals, and all you have to do is look at those opportunities and execute trades. You have a hot list, 10 stocks of your choice. So this list is tracked, checked for you daily, and you automatically get any buys and sells on that list. That has a $99 value. Some trade tools, stock screener, trade maps, option software. The Visions options software is available for your PC. So that's about a $600 monthly value. You get that for $3 a day. And for today's webinar special, the limit of 25 people will give you $99 a month for 12 months, or one payment of $997 for a year. So go to win.wallstreetwinning.com/webinar. And to get your free Cedric chart, I've indicated that their investor alert, look at a little chart to the right here. I encourage you to go check that out. It's a PDF of a description of what I think is happening in the economy, and my Cedric chart that I published in 2002. And it will show you what might be coming up here shortly that you need to be aware of and take action in your investment account. I want to make sure that that is something that you can look at. A lot of people have told me. I published it way back in 2002. It's been updated. The price of the book was $25, and they said the chart paid for the book many times over. So get your free Cedric chart with this amazing offer.